Hey, welcome aboard. It's Walter here and Naked Forex. You may have read the book. If you haven't read my book, totally cool. But one of the things I want to talk about here is how in the book, I talk a lot about support and resistance. In fact, all of the strategies essentially in that in this book, are all about support and resistance and simple naked Forex patterns. Now, what's interesting though, is that since I've written the book, I've actually been able to simplify my trading even further. And I'll share with you exactly what that looks like. Let me show you the old chart here. All right. So what's happening here is this is the euro. Now, what I like about this chart is I like the fact that not only is the market moving lower, like it's going down, down, down. Not only is that happening, but we have, if you look at the big picture here, we have essentially the market has bottomed out or touched a level here of significant support resistance. But I don't think that really matters. And I'll tell you why. I'll show you why. See this right here? This is my programmer created this for me. This pulls all the open position ratio from IG Markets, which of course is a huge retail broker for Forex traders, CFD traders, stock traders. It's a massive company. And so if I look at this, I want you to pay attention to this euro right here. See how it's red? This is telling me that 26% of the traders are actually short the euro and 74% of traders are long. This means it's way out of kilter, that we're over that 70% mark. So the retail traders are largely long, and they believe that the market will break through this support level. I, however, am keen to short it. I'm going to sell. I think it's going to break. And it's not necessarily because it's shown me anything in terms of, after all, it did in fact print a kangaroo tail. And you'll know that in Naked Forex, kangaroo tail is a big deal in the book. It's a chapter is devoted to it. However, it doesn't have a lot of space. You can see this low is lower. And not only that, but look at the market structure. And this is what really what I want you to pay attention to here. And by the way, if this sort of stuff, you like it, you might like the small account big profits course, which is still open right now as I speak. You can get into that by clicking the link below this video or above this video. So what I want you to do is think about what's happening here. First of all, we know that most of the traders are buying, and we know that most of the traders lose money. Retail traders I'm talking about, not the pros, totally different thing. And we also know that the big candles most recently have been down candles. Like these candles, the big ones are down. Look at how the largest candles across here are almost all bearish candles. So that's telling me that we're in a downtrend. Now you might argue, and I'd say you'd probably be right, that we're in a bit of a consolidation box now. And that's okay. That's okay. But if I were to look at just the structure of the recent moves, you'd have to probably admit to me, and if you didn't want to admit to me, you could ask a 6-year-old, like we talk about in the book, the cookie test. You give a 6-year-old a cookie and you say, what's this market doing? Is it mostly going up or mostly going down or up and down? And I think that most of our consultants, if we were to look at these lines, I think most of our consultants would have to say, yeah, it's going, if you look at this, it's going mostly down. The market's mostly going down. And not only that, but here's what I want you to focus in on. And this is what I want to share with you. See how this market is making this little move like that? That is a classic retracement before down move. And there really are only two of them. And if I can pull up Forex Tester here, we've got the Euro 4-hour chart. And what I want to do here is share with you what this looks like. It looks like we're in a box right here right now. But what I want to do is see if we can get into, there's a nice kangaroo tail at the edge of the box. What I want to do here is get into a trend. And then I'll share with you these two types of retracements. Okay, we've broken out of the box here. We may come back and touch it. If we don't, that's okay. This is one type of retracement right here. After you get a bullish, it could be bearish too, but in this case, it's a bullish move. You'll see a box retracement, or you'll see the trend line downward move on an uptrend, or the trend line upward move on a downtrend. So those are the two most common ones. So let me share with you. Well, Okay, so it's broken up higher again. Now, what should happen eventually when these bearish or bullish candles die out is we're going to see, again, we're either going to see this move down like that, or it's going to box up like it did over here. And that's your opportunity to get in. That's why I'm going to sell the euro. Okay, it broke higher, but now let's see if we get a okay, so here's your retracement. This is what I'm talking about. This is the move. This is the sign that if we break above this trend line, I want to go long. Okay, so I put my buy stop above there. My stop loss goes down here. Now this trade could be a loser. I don't care. I'm just saying this is the principle. Okay, so it went down below where my stop loss would have been, so I would not take this trade now. I would actually have to wait for it to break the trend line again. It's going to, I don't know. So I put it like that. Okay, well, this is now a box. This is what I was talking about before. Now we're into a box. So I would put a box here, and I'd wait for it to get out of the box. So we're no longer in the retracement thing. Okay, well, it triggered my order. I didn't remove it, but you get the idea. It broke higher than the box. Now we'd look for another retracement, either a box or a trend line. So we have another box here. So now what can I do? I can put another box here, and I can say, okay, if we break out of this box, I'll go long. And there it is. So I put my buy stop above there, my stop loss down at the low of the candle, and let's see if it's going to go. Yes, it does. So now my first trade, I'm going to go ahead and remove some risk there. In fact, I'm even going to remove some risk on my second trade, like this. And let's see what happens here. We're in another retracement here. So I could put a buy stop above the high here, assuming that we're in another box, my stop loss down here, and see if it goes. Yeah, it did. I'm going to move all of my stops up here. Awesome. I can move my stops up here. So now basically, I'm not going to lose money at this stage, because even if my last position gets stopped out, so now I have another one. I go, okay, if we break above this trend line, I'll go long. I can go long right here, stop loss down here, and like this. And all I'm doing here is riding this trend for all it's worth. Of course, my last trade is going to be a loser. Of course it will. That's always going to be the case. But what I'm trying to do here is take advantage of the trend move. Instead of having, one or two positions on the trend, I've compounded them so that I can really take advantage of this trend. In fact, I could put another buy stop above there and put my stop loss down here. So this, obviously, it's not going to always be this awesome. Like sometimes you're going to get into one trade and then the second one will get stopped out or what have you. Wow, this is really awesome. But you get the idea. And the important thing I want you to pay attention to here are the types of retracements. The trend candles are large. The retracement candles are wicky and small. Notice how this is always the case here. The trend candles the retracement candles are small, and they often alternate color, and they get wicky. The trend candles with the trend are always going to be big. And it's not just the bullish trend. Like if you go back and look at bearish trends here, let's see if we can find one. Let me see if I can find one for you. Like the bearish trends are the exact same thing. Here's the big bearish candles. Here's the little wicky retracement move. Bearish retracement move, bearish retracement move, and then that trend was over. So that one only had two retracements, and then the trend was over. Some of them will be better. Let's see if we can find another one for you. I think you get the idea. Here you go. Here's some great trend line retracements here. Look at this. There's one right there. There's another right there. There's a box right there, like this. See? So this is exactly what happens like all the time. Here's one where I would look at this and say it's a trend line. And then eventually I might say, you know what? It's not a trend line. Actually, kind of like I did before in our example, I'd probably say, you know what? This is more of a box now. And I wait for it to get out of the box. And of course, once it did, I'm in. But then look at this. This would have probably been the downfall right here, because this is where the market goes choppy and doesn't really go anywhere after that. So that's when this is where you would get into a losing trade at the end. But you still had 1, 2, 3, 4 opportunities to ride this trend out before the fifth one somewhere over here, or maybe over here. I don't know, depending on where you get in. You might actually decide once it took out this low right here, you might say, you know what, this trend's over. That's a pretty good idea. But you wouldn't have known that here anyway. So I hope that this helps, guys. I really hope these videos help you. The reason why I make them is because I want you to be able to take these ideas and test them for yourself. I'm not claiming that this is going to work for everyone. I'm just saying this works for me. This works for my students. This is something that if this resonates with you, have a look at the Small Account Big Profits course. You can click the link below or above this video and get more information. I wish you very happy trading, and I hope to see you mañana when we do another video. Okay, take care. Bye. See ya. Bye.